Welcome to this session on Financial Inclusion Week. And we're going to ask a very fundamental question in this session, and that is, are the multilateral climate funds rarely seem to reach vulnerable communities, and can inclusive financial service providers really help address this? Now, the Green Climate Fund clearly thinks so. And we have this lovely quote at the beginning of CGAP's outstanding paper, 8 Billion Reasons, where the executive director makes it very clear that she sees a significant role for inclusive finance in delivering some of these funds from the Green Climate Fund. But right now, we are in a situation where that is nice intent, but limited delivery. We have a situation where adaptation finances are, the needs are 10 to 18 times more than the current public adaptation finance flows. So you can see from this little graph that really only 6% of the need is being met. And most finance is still being directed at large scale projects and not at locally led adaptation efforts. And furthermore, less than 10% of the funds are actually reaching vulnerable communities. And indeed, only 26% of the projects financed have gender intentionality. So we have a long way to go, and we're going to have to leverage private sector capital, because even the amount that has been promised by the developed world is significantly less than the needs that have already been identified. Next, please. One of the ways that we will be able to leverage private sector capital is using blended finance. And here we're talking about essentially three types of approaches to leveraging capital. The first is normal financial leverage, the second is reducing the weighted average cost of capital, and then the third is reducing risk. And this type of blended finance arrangement will be essential if we're going to crowd in private sector capital, because inherently vulnerable communities are higher risk, and therefore we will need to be very creative with our financing mechanisms in order to reduce that risk and exposure for private sector capital. And that, of course, includes inclusive financial service providers. One of the things that CGAP has been expressing concern about is that private sector service providers will actually withdraw from climate affected communities rather than service them because of the associated risk. So addressing that risk is going to be really important. Next, please. So household adaptation strategies need a range of financial services, and those strategies will vary according to the nature and the frequency of climate events. So if you take a traditional actor risk management approach, so accept, control, transfer, and avoid, the sort of high frequency, low severity, day-to-day events, even though they're becoming more frequent, are something that households will probably need to accept. And here they'll be using savings, remittances, credit as financial instruments. But by the time we get to the sort of more medium frequency and medium severity, we need to be starting to think about control. And then we're back to those blended finance supported credit and grants to facilitate adaptation of those households. And we see examples of this, for example, in the increased use of saline resistant seeds in southwest Bangladesh, or drought resistant seeds in Africa. For the low frequency, high severity events, obviously we're looking at transfer, and transfer is traditionally insurance, but there are also opportunities at the higher finance level to look at guarantees and catastrophe bonds. And then finally, for the low frequency, highest severity, we're looking at avoid. And BRAC, for example, in Bangladesh is already facilitating the migration of people away from cyclone-affected areas and resettling them in towns and cities away from the southwest of Bangladesh. Now, if we pull all that together, what I would like to believe is that there are indeed synergies between locally led adaptation processes and financial services. So in the ideal world, we will see these multilateral climate funds together with international impact funds leveraging blended finance instruments in order to deliver financial services to community-based organizations and locally led adaptation strategies support. And that's important because this adaptation is going to be key to building resilience amongst these climate-affected households. And what I think we can reasonably hope to see is that as the digital revolution progresses, you will have both financial and data flows moving in both directions, and thus informing and helping financial institutions manage risk, and at the same time allowing them to lend into those climate-affected areas. So with that, I'd like to introduce my stellar panel, who are going to unpack a lot of these issues that I've dashed through at great speed. So let me welcome, first of all, Tita. And Tita, perhaps you would like to introduce yourself and your outstanding organization.
Thank you, Graham. Good morning, good afternoon, good evening, wherever you are. It is a pleasure to be here. I am Tita Alvira. I am the Chief Partnerships and Programs Officers for Legado. And Legado is an international NGO. It's a climate justice organization. And we work with indigenous peoples and local communities in Kenya, Mozambique, Peru, and soon to be in Indonesia, providing the spaces for creating the solutions of their choosing to live well and to really adapt and be resilient. Thank you, and it's a pleasure to be here with all of you.
Thank you so much, Tita. Rohini.
Hello, welcome everyone. Thank you from Bangladesh. I'm Rohini Kamal. I'm with the IGD BRAC Institute of Governance and Development, which is a academic and research institute under BRAC University based in Dhaka, the capital of Bangladesh. I'm an assistant professor for the Masters in Development Studies program, and I also lead environment and climate research at the institute. Our work mainly looks at the economic impact of climate change, so impacts arising from the physical changes, but also impacts from the human response to the physical changes. So that could be adaptation, mitigation. Our work places climate change within existing environmental, socioeconomic, and political realities, with a particular attention to the distributional impact on different groups of people.
Great. Thank you so much, Rohini. And Peter.
Yeah, thanks so much, Graham, for inviting me to join the session. So my name is Peter Zetterly. I'm climate lead at CGAP. I have been leading our climate efforts since we first started looking at climate change about 3 years ago. And when we first started looking at the intersection between climate change and financial inclusion, we, to be honest, weren't quite sure what we would find or how much of an intersection there would be. But we quickly came to see just how central the intersection is for both sectors. So we're now doing a broad range of different things in this space. I'm only going to touch on part of it in this conversation, so I would encourage any audience members to check out our website, cgap.org/climate, where you can see the full range. But to your question, Graham, I think there are huge synergies between climate change and financial inclusion that are really important for both sectors. So I think this is one of the most urgent conversations in financial inclusion today. So I really appreciate being here and look forward to getting into it with the panel.
Great, thanks so much. And my name is Graham Wright. I'm the Group Managing Director of MSC, which is a small but noisy consulting company. And we work extensively on climate change and financial services to support that, and also on locally led adaptation. And I want to take just 2 minutes before we get into discussion with the panel to talk about locally led adaptation. And the reason I'm having to do that is because sadly, Anju from the Global Center on Adaptation has gone down with the flu, and therefore one of the key members of our panel is in absentia. So if you think about locally led adaptation, the ideal model is that local government and the communities affected by climate change work together to build a local adaptation strategy or plan. And the reason that that's really important is that, first of all, we know that climate impacts are very, very local in nature. So the idea of just doing it at a national or even a district level is very often simply not going to address the key issues. And as I'm sure we'll hear from Tita, the local knowledge that the communities have about climate impact and how to respond to climate change are really important. And so locally led adaptation seeks to access that knowledge from the community and blend it with local government capabilities in order to optimize the adaptation plans and activities for any given community. So with that, Tita, perhaps I should ask you, what role can community-based organizations play in the delivery of initially adaptation plans and also financial services to climate vulnerable households?
Thank you, Graham. I am unmuted or no? Yeah. Thank you. Yes, and I want to start by emphasizing what you just said also, Graham, is that community-based organizations work to improve the well-being of the communities they represent and serve. They really have that localized expertise, the trust and accessibility, and they also mobilize the community around shared goals and initiatives. So by understanding the local socioeconomic and environmental context, they are able to really identify the specific financial needs of the vulnerable communities that are impacted by climate change and the challenges they face in accessing these financial services in the context in which they live. So therefore, they can facilitate access to financial resources and provide localized and tailored customized financial products. And I'm going to use an example of one particular organization in Peru named Finca Peru that is a non-governmental microfinance organization which operates in the highlands of Peru, collaborating with urban, rural women and youth women with social and social with economic and social disadvantages. And one of the things is they also work with several community-based women organizations. So what are the roles, to give you the example, what are the roles that they play? One of the first important role is promoting financial inclusion. So inclusive finances. How and why? Was because they are supporting women and young women who have been excluded from formal financial systems. They ensure the inclusivity by advocating for their specific financial needs and ensure they have access to gender-sensitive financial services and tailored financial services such as family individual loans, group loans, microinsurance, and savings programs. And in addition, the other very important role is building financial literacy, providing training in subjects such as the use of credit, managing loans, insurance, development of entrepreneurial skills, and something very important is the improvement of self-esteem, social discipline and values, and women rights. And through all these processes and training, they are also facilitating collective action by working with organized community groups, enabling members to save and lend to one another like BSLAs on a rotating basis. So therefore, building the resilience through shared resources. So if I want to summarize roles like promoting inclusive finance, building financial literacy, facilitative collective action, and building resilience through shared resources.
Great. And that collective action, of course, is really important in the context of adaptation to climate change. Peter, from your and CGAP's perspective, what role might inclusive financial service providers play to support adaptation and resilience amongst climate vulnerable households?
Thanks, Graham. Well, we think inclusive finance has a unique and underutilized role to play in building resilience to climate change, and more broadly, sort of broadening the base of climate action to encompass everyone on this planet, not least including women. The short reason for that is that financial services are the critical enabler for any action that people want to take on climate, as on many other things. And you spoke to this in your intro, right? But savings and credit products are what people need to sort of enable them to invest in cleaner technologies, adopt more sustainable practices, adapt to climate change, build more resilient livelihoods. They need to amass the working capital to do that. Savings and credit is what helps them do it. Remittances and government payments are critical to help households live through climate shocks without resorting to negative coping mechanisms that can put them on permanently lower development trajectories coming out of the shock and less prepared for the next one. Insurance solutions, obviously, to the extent that they're available, help to strengthen risk management, helps to unlock investment in livelihoods in the face of growing risk. They help people rebuild their lives after a crisis. So fundamentally, when we think about locally led adaptation, we see few better ways to foster that than to put resources directly in the hands of climate vulnerable people, whether in the form of government cash transfers or loans from commercial financial institutions. Simply put, if you want to foster local adaptation, put money in the hands of the people who need to do the adapting. So inclusive finance has an absolutely massive role to play there. And my sense from our initial forays into the climate space is that the locally led adaptation space is focused, still revolves heavily around government intervention, around the interventions by development stakeholders, and making those processes more inclusive. And that's very important. But in our view, is not a substitute for empowering people directly by putting money in their hands, in their control, that they can decide what to do with. So we think inclusive finance is central here. We think that by expanding access to inclusive climate finance, we can not only bolster climate adaptation, but help to unlock grassroots investments in green technologies writ large. So there's a common complaint in the climate space, the adaptation space in particular, that there's not enough pipeline of investable projects. But that perspective leaves out the needs of the people on the ground. Climate exposed people have plenty of pipeline of actions that they want and need to take for climate. What they don't have is the financing for it, right? The reality is that a lot of green technologies now are both cheaper and better for the poor, but they require upfront investments that are larger than people can save for. So inclusive finance there can be critical in helping to unlock those investments. And the Pago solar space is a wonderful example. The latest number I saw was 480 million people across developing countries that now access clean energy, thanks to an innovative combination of digital payments and embedded credit as part of the inclusive finance ecosystem. I think that's really demonstrates the power of inclusive finance. But as you mentioned in the beginning, the fact is right now, climate finance is not particularly inclusive, right? 95% of climate finance is going to mitigation, not adaptation. 3/4 of it are going to high-income countries. Multilateral funds are routinely criticized for being very slow, taking years to deploy money, being hard to access, mostly dispersing money in $50, $100 million chunks to governments and development agencies. Less than 10% of climate finance is estimated to go toward local climate activities, which doesn't even mean that it gets into the hands of people, right? In the inclusive finance space, we know how to get money in the hands of people. We have a whole ecosystem developed over decades to convert large ticket global funding into small ticket loans and other services for low income communities. So when we look at climate finance, we see lack of inclusion as a major problem in that space, and a problem that inclusive finance is extraordinarily well placed to help solve.
Brilliant. That is such a good summary of the issues. And as you say, we've got the existing pipelines, the plumbing to deliver these services to many, but sadly not all, climate affected communities. And it's sad that they have yet to be used effectively by these big multilateral funds. Hopefully that will change soon. Rohini, how has BRAC used its microfinance infrastructure, that plumbing that I just talked about, to deliver financial services to climate vulnerable households?
So in Bangladesh, at least, NGOs like BRAC have a very deep and widespread presence all over the country, especially, as you mentioned, through the microfinance program, particularly, actually mainly through the microfinance program. This means that there are very few communities in the country that the organization cannot reach. It also means that there is an ongoing presence within the community. This relationship better places the organization to potentially come up with workable solutions, taking into account ground realities, constraints, but also to try new solutions. So though the microfinance program is the most ubiquitous, it does not, however, deal with the poorest families, as I think a lot of people here do know. For microfinance, there is a huge portion of the population who cannot access microfinance and would not be able to, as it stands, be able to gain access to those, particularly ultra poor families. Nor does the microfinance program and all its products necessarily address all the climate needs. So more importantly, I think NGOs like BRAC is very well placed to use its vast array of different programs, not just financial services, but social safety nets, as was mentioned already, disaster management, education, health, and even small infrastructural programs that it does. This gives the opportunity to see exactly how and where financial inclusion fit in as part of the bigger puzzle, and how to make the finance more inclusive, but also how to make the finance more fit to purpose to the problem at hand, which is climate change. We see a version of that with BRAC's Ultra Poor program, which nests its financial access with other interventions. But also, I think BRAC's experience with crop and livestock insurance through its CCP program, climate change program, it has found it helpful to offer a package service through which combines insurance with ongoing loan and savings products, making it easier for clients to deal with installations. For weather index insurance, the program found it helpful to provide actionable items tied to the weather and climate information, which clarifies complex information. So this would involve not just translating the technical portions, but tying it to a range of advice to farmers. So not only on insurance, but maybe crop choice or harvesting time. For instance, if there's a higher probability of earlier pluvial flooding, it might mean bring forward your harvest, change your crop, or take out insurance. It's a menu of options. So having the translator of weather and climate information also be the provider of service increases credibility. Another successful example, which we were just talking about before we went on live, was an example of guaranteed credit line in face of climate shocks. This was done with BRAC in collaboration with Dr. Gregory Lane, who's at the University of Chicago now. This was offering farmers a line of credit if validated flood occurs during the upcoming agriculture season before cropping decisions were made, and it was found that this helps. Households are often unwilling to invest before a disaster event because there might be needs arise around consumption, price hikes, cost of relocation, health or housing damages, and so on. So the experiment found that the farmers who have access to this credit line were preemptively be able to make more profitable investments. And after flooding, also, they were found to be less affected, and it was found to be profitable for the program as well.
Yeah, that's great. And I two key takeaways from my perspective on this. The first is bundling products and information. And particularly when we're lending into these vulnerable communities, bundling that with some form of insurance in order to reduce the risk for the borrower is, I think, really important. And of course, it reduces the risk for the lending institution as well. And the other thing, as you say, is these loans that you're able to access when a flood is predicted, allowing you to respond in advance rather than clearing up the mess afterwards. And that has made a huge difference. Those clocks, contingent loss lines of credit. So let me now, we've talked about some of the opportunities and success stories. I want to talk a little bit about the challenges as well. And one of the issues that I think has challenged those of us who've been involved in locally led adaptation to date, and particularly the outstanding UNCDF Locale program, is that it has largely been performance-based payments that are grants. And we can see from my presentation at the beginning that there is no way that the limited funds that have actually been delivered, or indeed the amount that has been promised but yet to be delivered, will cover all the needs for climate adaptation. So that's why you hear me talk repeatedly about crowding in the private sector. And so, Rohini, I'm going to come back to you again, I'm afraid, immediately now, to talk again about Basis BRAC's experience. What have been the most important challenges and pitfalls for inclusive financial services providers seeking to provide those services to climate vulnerable households? What have been the challenges?
Right. So I think one challenge, which we are beginning to sort of try and quantify, is the risk to the MFIs themselves as they stand. So if you have, we're thinking of 20-year flooding, and the 20-year flooding becomes more frequent, how does it affect the performance? That's one. And then, of course, to the community itself, that is more evident, that and trying to see how do we fit the two, how do we fit what's needed. But one thing I think I kind of mentioned is that microfinance programs do serve a particular segment. It does not necessarily serve the most vulnerable communities, at least in Bangladesh. So that is one. How do we make financial services more accessible to serve the needs of the ones who need it most? And I kind of mentioned the benefits of coordinating between different programs and bundling choices and options, and also which helps de-risk as well. But in reality, this is difficult. It's difficult to plan and difficult to managerially execute. The third thing is, currently, despite many of innovations being tested, the main products offered by the programs they're still pretty traditional. There is little product diversification at scale. Not even those that have been shown to be effective, like the guaranteed credit line I had mentioned. So individually, a new product might be profitable, but I think compared to the usual microfinance operations, the opportunity cost might still be an impediment in terms of time and effort as well. So I think unless the current business model and incentive structure change, it would be difficult to kind of test more new products more suited to some of these challenges and to different groups as well. Lastly, I think any solution that does not take into consideration underlying inequalities would fail to reach the most vulnerable. I think Tita already mentioned, financial literacy. So in Bangladesh, we've seen that technological solutions like digitalization of financial services are extremely promising and bring great benefits, but it can widen access to benefits unless they also do not concurrently address the gap in women's literacy. Women are twice as more likely than men in Bangladesh, in rural Bangladesh, to rely on others to operate their accounts, for instance. So programs like the BRAC's Ultra Pro graduation program that I mentioned, it has found to be effective against climate shocks, even in longer term. I think because it nests financial services with its focus on women's empowerment, on training, on creating peer networks, and links to government social net programs as well. So I think doing those links, even if it's a little difficult, would be those coordination has been a huge challenge, which we're learning more about as we go forward.
Great. And I want to take up the reach problem that you referred to with Peter. We know that many of the existing inclusive financial service providers don't operate in climate vulnerable geographies, or indeed preclude the households that are most climate affected because they're so risky What measures do you think we need to take in order to change this and encourage multilateral funds to route climate adaptation funds through these inclusive financial service providers?
Yeah, thanks, Graham. This is such an important question. And even beyond, trying to encourage them to go into spaces where they're not available, I think the first order challenge is to make sure that they keep serving the clients that they are serving, right? As you mentioned earlier, it's a major concern for CGAP that we've been raising the alarm about for the last couple of years, that the sort of boundaries of inclusive finance will actually start to recede as a result of growing climate risk. In the course of our initial work on climate, it became very clear that inclusive finance providers are facing an increasingly stark challenge and a troubling one from climate change. And the way that not all providers do, and I'll say more in a minute, but simply put, they were all looking at their climate risk exposure going up and feeling growing pressure from their regulators, from their investors to reduce that exposure in their portfolio. And the obvious, easy way to do that is to pull back from climate exposed clients, which of course is exactly the opposite of what needs to happen at a moment when we need to give more help to climate vulnerable populations in dealing with a crisis that they didn't create. So we talked to all the big players in the sector. They've been sharing with us their very real concerns that they are increasingly facing a choice between commercial viability, which they can't give up on, and their core mission, which they also can't give up on. And I think it's the providers that feel less strongly about the core missions are the ones that lose less sleep over this. But the inclusive finance space, to its great credit, feels so strongly about the core mission and is therefore at the real forefront of trying to figure this out and really feeling that tug between these two opposing forces. We've already seen examples of providers pulling back from certain regions or sectors, including right here in the United States, where it's getting hard to buy property insurance in many states now, including Florida and California, right? So we're doing some work right now on what happened to the microfinance sector in Pakistan after the floods there in 2002, and it's really confirming these fears. So we'll be sharing more about that soon. But given that this is only going to get worse, our concern is that inclusive finance is really being actively undermined. So what do we need to do? Well, I see at least three ways in which climate funders specifically can get involved. The first is, and this, will echo a little bit what we heard previously. The first is to help financial institutions manage their climate risk, right? And there can be different ways to do that, including direct risk sharing through first loss capital, guarantee schemes, and so forth, that mean that inclusive lenders are not carrying the entire risk of serving climate vulnerable segments, because if they're forced to carry the whole thing, they won't be able to, right? And it should also include developing and financing better risk transfer solutions for financial institutions that are operating in climate exposed settings, including things like portfolio insurance. So you can get insurance for your own infrastructure, your branches and whatever, that's fine. It can be expensive, but it's available. But there's very little out there to help cover climate risks at the loan book, which arguably is the bigger concern. But there are some interesting examples out there. Vision Fund has a solution called Artis that's really interesting that they use for their own banks, and I think we need to see more of that. So that space is a perfect use, I think, of both the financing and the know-how that climate funders can bring to the table. The second is to develop products and solutions to help clients manage their climate risk. So, of course, ultimately, we want lenders to reduce their portfolio risk by helping clients be less vulnerable. The lenders understand this, but they don't know how. They're not climate experts. And even using some of the publicly available climate risk models and so forth requires capabilities that they just don't have in-house, let alone figuring out, what adaptation options clients have and designing financial solutions to match those options. So the climate players, including the climate funds and other actors in their sort of orbit, are really badly needed to support that effort with both TA and with funding, to develop better solutions, test them, and scale them up. And third, to help financial inclusion funders invest more in the climate agenda. One of the things we need to see is a greater climate focus from the existing inclusive finance funders, especially in adaptation, because green finance is nearly all mitigation, as we discussed. And we've talked to a bunch of funders who want to do this, but they also struggle with the risk, as well as with more sort of prosaic issues around how you quantify adaptation and resilience and what metrics you put on it. So again, climate funders and others in the climate space can play really critical roles here. On the one hand, to help provide financial risk sharing through guarantees, first loss, And on the other, through defining resilience and adaptation metrics that funders and others can use to design around, and finally, just to help figure out, well, what do appropriate adaptation solutions look like in a given context? Because that's knowledge that the lenders don't have and shouldn't need to have.
Great. Yeah, no, I think that's absolutely right. So, I mean, let me turn to you, Tita, again. I mean, many community-based organizations struggle with the requirements to access, manage, and report on climate funds because, you know, there are so many demands from the climate funds in terms of accounting and reporting and so on. What should be done to address those challenges?
Thank you, Graham. That's a very important question. And I want to start, for example, really that if in practice, are these community-based organizations even aware of these climate funds and that these funds are really coming to them or they have the opportunity to access them? And I don't think that's a reality. That's not very clear. And they might not even, and if there are, they are not even prepared for them. And as you just say, and something that is key here too, that really matters because so much of the upstream design is focused up there and the way that things are being designed, you know. So when funding has reached a community-based organization, and from what you just said, it has been really top down and restricted instead of enabling. And it also often lacks the alignment with the existing and proven really local strategies and forces the community-based organizations to move to different directions. So what I see also is that, and the organizations that we work, they are not really being met where they are at. And I want to give you an example, for example, that sometimes when funds come, they are not really aligned with the priorities. So the funds really are earmarked only for certain people or for certain outputs. So an example in our indigenous communities in the Peruvian Amazon, where they, through the process that we have been working on, they have prioritized for their well-being a system of sanitation, building in drain latrines and bringing water by gravity from the mountain, using their resources and their assets. But really the funds that they can only receive are only used for reforestation. So therefore, what I wanted to mention here, that there is a need really of unrestricted funding, and that the CBO and the community could decide on what the solutions they want to invest the funds on. And also something that has been key too is that when the funds come, they come with administrative burdens that really do not align with the local organization systems, without the approaches and ways of that they do for measuring impact. And really what it's doing is reinforcing inequitable power dynamics of who is leading, designing, and implementing solutions on the ground. And let me share also that I have heard from many community-based organizations in Eastern Africa and in the Amazon region that they have really, in order to access funding, that what they have to do, like funding to really support their solutions, they have had to invest really vast amounts of funds and resources to hire experts, you know, in writing the proposals, then also invest in a team to manage the funds, in reporting, and really following the rules of the funder. And that is really burdensome. And also they feel that it is a lack of respect of their capacities and needs, and the funds do not really reach where they should be reaching. So in that way, these practices are also concentrating power and resources in the hands of a few organizations and marginalizing the others. And the same as you were mentioning, that is not like these funds are not reaching everybody who really needs it. So they really are advocating for funders to meet them where they are at, invite them into an equitable and an aligned trust-based partnership, recognize the capacity they have and build on that, supporting the growth of the capacities they need, and accompany them in the journey, providing this, as I said before, unrestricted funding, and simplify the system for writing the proposals and reporting. So really bear the risk together, if we talk about in those words. And something that I wanted to also mention here is that we have seen lately more and more funds that have been established in the Global South to give directly to communities and really responding to the community's priorities. And so, for example, I just want to bring them here because have really responding to their actual needs and solutions to build resilience. So such funds, for example, Alianza Fondo del Sur, or something called Socio-Environmental Fund of the Global South, or many indigenous-led funds such as the Pahuanca Fund or AINI Fund, and also more localized like Mesoamerican Territorial Fund. I want to bring them here because they really are acting as funds that are really supporting organizations on the ground and communities on the ground, responding to their needs and their realities. And they really have built that trust-based relationship ongoing into that.
Yeah, I mean, this is such a good point. And there's the Life AR project that DFID and others, IEID and so on, are working on. And it's trying to do exactly this. And I find that really interesting because I know that in the UK, we've got, rabid newspapers that love to allege that development money is being misused and so on and so on. And that's why so many development agencies have such stringent project development and accounting requirements. And this mismatch, somehow we're going to have to overcome, and it'll be a very interesting challenge. So let me move now to a vision for the future. Let us talk briefly about how we see things moving forward. We've talked about the opportunities, we've talked about the challenges. Rohini, how can inclusive financial service providers develop and scale finance for climate resilience?
I think a lot of it you've mentioned already. Given what the needs are, I think the future there will be increasing need to raise finance through capital markets, harnessing longer term, more patient capital for climate programs, because I think currently, unlike how NGOs operate, some of the impacts of climate change and evidence of the efficacy of solutions can only be gauged through a much longer term assessment than is currently evaluated through project funding cycles. Multilaterals, Southern-based policy banks, I think they're better placed to develop these blended financial instruments. And as Tito said, I mean, there has to be more meeting in the middle. What are the needs of the community and what are the specific needs of this problem? As I said, the problems and the kind of evidence we need is much longer term than what is currently being provided. So really moving into that direction, maybe allowing for more experiment on more targeted, effective financing solutions, targeting for different type of impacts at different places for different subgroups of people. I think even with the same event, even within the households, there are different impacts and different ways of responding and different solutions that work because of different dynamics. So really trying to allowing more of that is what would be useful. So we, from BRAC's experience, one ongoing thing that's been working is its establishment of the Climate Bridge Fund. I think it was from support of the German government through its policy bank, the KfW. It involved a capital grant being invested in a government bond and then having the interest being used to finance projects. So maybe having more of these funds housed in more Southern-based organizations would be one way to go forward.
One of the other points that I always find myself making is that a lot of the adaptation that is required by households require longer than the typical 1-year working capital loan that MFIs currently typically deliver. And so we're going to have to find a way of allowing people to borrow larger amounts for longer periods in order to adapt. How will Legado enhance the ability of community-based organizations to channel funds to help communities respond to climate change?
Thank you, Graham. I'm sorry, I had an issue. I wasn't hearing you, but now I hear you. So yeah, let me start by saying again about that Legado, that is a climate justice organization, and we work alongside indigenous peoples and local communities and their respective community-based organizations in places that are incredibly important for biocultural diversity, including Kenya, Mozambique, Peru, and Indonesia. What do? We really, with community-based organizations, we want to support local people to design and implement the solutions that benefit really their communities and their landscapes. And something that I think is always important to always remember that indigenous peoples and local communities really, and we have been saying, are the most really exposed and vulnerable to climate change. But really, yet they have been doing so much to be resilient, but their knowledge and their leadership sometimes are not included in the design and implementation of these, what we call climate justice solutions. So what do? We really work with them through a participatory and inclusive process, seeking input from marginalized voices, women, youth, elders, and mapping really and identifying what are their assets, their strengths, and how we could co-facilitate and create spaces for reflection, learning, and analysis that in a way communities develop and design priorities on their terms and solutions on their terms that they want to achieve to confront or adapt to climate change, and in something that we call a 360 or holistic community-led change. What do I mean by that? Is that the solutions and priorities that come through this process of learning and reflection, giving them enough time to do so, really are holistic and integral, because people, and I think all of us think in a way that to live well and to really adapt and support, we need all of us. We need environmental health, we need people's health, we need our livelihoods to be thriving, we need education, culture, and governance. So that's a holistic thinking. So by creating these integral priorities that reflect the way people think, these priorities really in the long term are last and catalyze buy-in in support from other communities and other actors. And I want to give you an example of an integral Thriving Futures priorities that have been developed through this process and how they have been supported first by the assets and strengths the community has, and second by the support from the community-based organizations that they work and the connections that can be made to access resources and support from allies in the territory like government or NGOs. So I'm going to take you a little bit through an indigenous community, Samburu indigenous community in northern Kenya, in Ingelai Community Conservancy, in which through these processes of developing their Thriving Futures priorities, and something very important here is a community very devastated by drought. One of the main goals was they want to diversify livelihoods. They want to maintain the areas where they have healthy forests. They want to recover degraded forests and soils, maintain water sources, and improve the grazing patterns to adapt to the challenges of increased drought to continue thriving as pastoralist communities. I'm really, in a way, actually reading what it came out of that discussion. And what is very important and key here is that how this community conservancy, because this is the unit in which they live, this is a actually protected area with direct use where they live and thrive with animals and everything, is that they are also participating and benefiting from the Northern Rangelands Carbon Project. And they have been able to channelize funds from their carbon community fund to support their priorities. And I think that has been huge, because really being them the stewards of that carbon, being them the ones who also are suffering from drought, how they could use those benefits to support in their important priorities. So they're doing grasslands restoration, controlling invasive species, controlling erosion of gullies, inclusive grazing management plans, including women, youth, the youth warriors called Morans, the elders, to really design how they want to manage their grasses, and also do forest restoration with native species. All of this supported by carbon funds, but also bringing in country funds and also organizing with all the, what you were saying, Rohini, is like how to do multisectorial dialogues and involve the other opportunities that are out there to put communities at the center and support the priorities that they are aiming at to live well or to thrive, or what we use to adapt to the changes that they're feeling. So I just wanted to leave it at that, and thank you.
Can't seem to hear you, Graham. I think you're passing the question to me.
Yes, sorry. I was just saying that it's great to hear Tita talk about carbon credits. It's the first time that's entered the discussion, and of course that may well have a very important role to play. Let me ask you, Peter, how will CGAP support the delivery of climate funds through inclusive financial service providers?
Thanks, Graham. I'll keep it short because I know the clock is ticking on the session. But yeah, we're working on this at every level within the work that I lead. First of all, helping financial institutions figure out how to respond to climate change, how to use climate risk analysis to support decision making and not just produce a number on portfolio risk that they don't know what to do with except try and reduce it. How to see their options on climate, on how to respond to climate and incorporate climate change into the business in a strategic way and not have it be something on the side, either a CSR effort or a compliance effort or a mix of the two, but actually be a core part of the business. And how to develop products and services that give clients what they need to deal with climate change. So we're building a sort of a modular toolkit for inclusive financial institutions that covers all these elements. We have a global community of practice with most of the global providers where we're working through these issues, learning together. We're also partnering with several of them at the country level to try and drive and document innovation that we can share across the industry as ideas and starting points for others to build on. Second, we're trying to build bridges between inclusive finance and inclusive finance and the funders at the global level. We're sort of engaging with funders in both sectors to try and create concrete partnerships that demonstrate what needs to happen, including using climate finance to carry some of the risk, as discussed, which is a win for climate funders if inclusive finance can help mobilize more funding, including badly needed private capital for climate action. So we believe there's a win-win there, and that we're working on finding a few demonstration cases that sort of show that to the industry. We're also working on helping governments and their development partners know how to foster financial systems that are more climate resilient and climate responsive. We'll have a paper coming out by the end of the year that offers a new framework for exploring what you need in a given market, along with an inventory of actions that either public or private stakeholders can try to take to fill those gaps. We're also doing a bunch of work on carbon markets. We're going to have a paper coming out on that in the next few weeks. So if that is something you're interested in, please stay tuned. As mentioned, we have a lot of material on cgap.org/climate, much more than I can represent here. We're working on policy and regulatory aspects. We're working with resilient rural women and the agricultural value chains and how to make them climate resilient. So there's a lot of different moving parts here. So if you're interested in this, please go to cgap.org/climate. It's updated very frequently with new content. And of course, don't hesitate to shoot me or anyone else at CGAP a question if we have one. Thanks.
Great. Thanks so much, Peter. And it's great to see the work that you guys at CGAP are doing, and obviously you have a leadership position in this. But yeah, I'm really looking forward to seeing some of that practical application beginning to bear fruit. So we've got just a few minutes left, and what I would like to do is ask you each for one key takeaway. If our audience leaves with one key takeaway, one thought from each of you, what will it be? Let me start with Rohini.
Yeah, yikes. I think coordination is, and coordination, across different things, coordination and alignment of priorities and mode of operation. How do you make microfinance institutions that are now mainly operating in a quasi-commercial basis and maybe have some portions of it at least, but climate resilience as an equal priority? It could be coordination about different needs. We've seen with our recent floods that financial access can't help if roads and hospitals are inaccessible, or warning systems or preparations are inadequate, or if women are still not being able to make decisions or invest in or sell assets despite being microfinance account holders. So that kind of coordination of between different parts of the puzzle and different priorities, I think, would be my one takeaway.
Great. And Tita, if you want to leave the audience with one takeaway.
Thank you. And I want to echo Rohini too, because, and that's a word that we use and we use more and more in our work in Legado. When we talk about coordination, we use the word in Spanish, articulación, that translates very well in French and also in Portuguese. That is articulación. If you think of this, no articulation in the words in English, but is the coordination, the integration, and the understanding that at different levels, everybody has their own assets and strengths. And what are the opportunities that we need to map those opportunities to collaborate? And we know, as you said at the beginning, Rohini, it's hard sometimes because people are used to working their own silos. But let's get out of the silos and really start coordinating and collaborating. And something that from the nature of the work that I do, put people at the center, because local people at the center, they are the ones who are burdened the climate change, as you started saying, Peter, but also the ones who have the solutions. So respect, put them at the center, and really coordinate and articular, in Spanish, I'm using that word, to really make things happen, because everybody has their own resources, their own ways of doing, their own knowledge. When can we sum up and make those synergies happen, really in an articulated way, or in a integral and integrated way? So I just wanted to say that. And something that I wanted to say too, very quickly, is that community-based organizations, sometimes they're often considered too small to scale or be impactful over time. But quite the opposite is really true. And that's based on how I start talking at the beginning, the capacity they have and the knowledge and the connections with the local communities, and the capacity to understand, to build that trust, because they are and belong to the local communities, and also have the capacity to mobilize and make things happen. So put them at the center too on all these issues towards a locally led adaptation. Thank you.
Great. Thank you so much, Tita. And Peter, one thought?
Yeah, I couldn't agree more with what Tita and Rohini just said. And my own reflection is along similar lines, right? That there really is a huge opportunity here for the financial inclusion space and for the climate agenda. There's so much complementarity between these two sectors, where each holds solutions to really important problems for the other, but so little of it has been explored. And that's partly because our own space has taken time to wake up to the climate agenda, and CGAP is as guilty as anybody, and to understand what role we have to play. But it's partly because climate actors often don't even know that inclusive finance exists, let alone what we can offer to their goals and their agenda. So if there's one thing I would like our audience to come away with, I think it's the resolve to get to work, bringing these two spaces together in concrete action to help low-income communities deal with the realities of climate change. Thanks so much for having me.
Great. Thank you very much indeed. And let me just add my sort of final 2 cents to these thoughts. We at MSC have been working initially with CGAP on really understanding the experience of climate vulnerable communities and how they respond and what financial services they need. And I think that exploring that will be really important, because the current suite of products that are being offered by microfinance organizations are not going to be enough. And we need to help them diversify and tailor them for responding to climate change. I also think that we need approaches to local-led adaptation that are tailored to assist inclusive financial service providers understand the needs and adaptation plans of the communities and respond to them as well. So product development, but also a clear understanding of what it is that they're financing and why, and the associated risks, so that we can then build the blended finance instruments necessary to underpin and de-risk lending into these more vulnerable communities. So with those thoughts, let me thank this outstanding panel and thank them for allowing me to ask invasive questions, and thank them for their comprehensive and insightful answers. And I hope that everyone listening will go to CGAP's website, and Rohini's outstanding website at Big D, at BRAC, and indeed Legado's website. And please don't forget MSC's website. There's a lot of really valuable information there, and I'm sure you will benefit from that. Thank you very much, and good night or good morning to you all.
Thank you so much. Thank you for the opportunity. Thank you.